We've been slow boiling the frog for 50 years, and that could go on for another 25. When it fails, it will fail very quickly, like overnight. If the worst case scenario becomes that international governments holding large amounts of US debt are incentivized to take their lumps and just sell the debt and migrate to the BRICS standard or some new commodity standard, interest rates will skyrocket in the United States. That could happen in a matter of weeks and single-digit months, whenever it happens. That you're going to see 50 to 75 non-US dollar-backed or non-euro-backed currencies fail in the next 25 years.
Kitco News special coverage of Consensus 2024 is brought to you by Diamond Standard.
Hello, I'm Michelle Makori. This is Kitco News. We're coming to you from Austin, Texas, continuing our coverage of Consensus 2024, one of the world's leading crypto, blockchain, and Web3 events, where many of the industry leaders have gathered, including Bill Barhydt, founder and CEO of Abra. Bill, so good to have you with us.
Oh, it's great to be here. Thanks for having me.
And of course, you were on the stage earlier on the OG panel, because you've been in the space for a very, very long time.
That's right.
And that's where I wanted to kick things off.
Okay.
Because back in 2011, you gave a TED Talk and you said that Bitcoin would become a replacement to the dollar and could become a global reserve currency. Back in 2011, when Bitcoin was around $3.50 per Bitcoin. So tremendous insight, intuition back then. And now you're projecting that Bitcoin will be the shadow central bank asset, or the shadow central bank, that Ethereum will be the blockchain facilitating institutional financial transactions and helping bring traditional finance on chain and be the central space for tokenization, and that Solana will be the retail blockchain.
That's the way it's looking. Yeah.
If that's a correct summary. So, seeing as you've been pretty insightful in the past, let's break that vision down and let's start off with how you're seeing Bitcoin becoming the shadow central bank.
Sure. So if governments led by the US had not started printing money outside of the value of some basket of commodities, which is what we were doing, only gold in this case in 1971, the price of Bitcoin wouldn't fluctuate. Right? Because its value on a commodity basis would look the same. It would go up because of the inflation of Bitcoin, but it would basically stay the same. The point being that it's the government policies, fiat, which means, basically decreed by the government to have value when there is none. Right? We tell you it has value, so therefore it has value. That makes no sense at the scale we're at. Right? And we've known that those of us paying attention to your question have known that for decades. Right? When you watch the power of compound interest, it works in two directions. If you're devaluing something by a certain rate every single year, you get the compound effect of that. It's just like if you're adding interest to your bank account every year, you get the compound effect of that. It's the same thing. So we have been devaluing the dollar, right, at a steady pace since the early 70s. We know exactly when it started. There's a speech that went along with it. And all along comes a new asset class, a fixed asset class, where we know exactly how many are going to exist. It is mathematically provable that that's the number of units of this asset that are going to exist. That's what Bitcoin gave us. It gave us the world's, literally the perfect digital asset, right? Something that you could move around without having to trust a centralized actor, and something that you knew would have a fixed value, which was the intent of the dollar. After World War II, the intent was there would be a certain amount of gold. Countries would give us their gold. To the victor goes the spoils. We would print dollars commensurate with a certain value of that gold, and you knew how much your money was worth, and the underlying assets were protected.
Right.
That was the grand bargain. Throughout history, every world power has reneged on that or a similar bargain time after time. It's happened. It's like the Matrix. You know how we destroy it every few dozen years and we get better and better at it? I feel like that's what's happening with dollar and asset-backed systems, because governments that start out with good intentions, right, eventually give in to the temptation to rule by decree, right? Which is what fiat money is. And so along comes Bitcoin. It really addresses those problems. It can't be corrupted by a government. It can't. There's no off switch now because there's so many wallets, nodes, miners that there really is no way to shut it off anymore, right? We know again what the inflation rate is and where it stops at 21 million Bitcoin. We know the date, right, that it's going to stop. So we don't know if and when we'll ever stop printing dollars. Now, if we did and we moved back to a commodities-based system like gold or other commodities, that would change things. That would be difficult given how much debt we have to pay off. It's difficult to pay off the debt when you have to pay high interest rates on a fixed float asset. It's very easy to pay off your debt when you can keep printing money. The problem with that is that eventually it forces the interest rates to go up because no one wants to buy your worthless debt anymore. And that's the position that the United States is in right now. They need interest rates to go down because they can't service the debt, right? But the problem is they've got to issue more debt, and the interest on the current debt is overtaking everything else.
Right.
So you have this predicament.
Right.
What am I going to do, right? Well, ideally what you would do is you would get your act together, stop, spending money you don't have, increase the value of the currency that you do have, and pay off your debt the right way, which is through deflationary measures over time. But that's not going to happen because that would be 10 years of
austerity that no politician wants.
That's right. That's right.
So I get all of that, and it's certainly a topic that we've covered extensively on Kitco, the debasement and devaluation of the US dollar, much like every other global reserve currency, has abused that privilege and lost it from the Romans to, there was a time when the Portuguese escudo was the global reserve currency to the Dutch. That, as you say, is the matrix, the pattern repeating. $35+ trillion in debt, more expensive to service that debt than what we're spending on national defense. The background is there, and clearly a lack of will to impose the kind of austerity that's necessary. How do we go, though, to this place where you say Bitcoin is the shadow central bank of the world?
Yeah. Well, I postulated that it could become that, and it would make sense that we would finally have a solution to this government's policy run amok scenario for hundreds of years. And the reason that I came to this conclusion was that, okay, I think that the pinnacle of kind of government centralization power post the pyramids was probably the moon landing, right? The amount of...
Say that again? The pinnacle
the pinnacle of central planning.
Yeah.
Of centralized government power. To me, at least in the last 250 years, you can make the case probably since the pyramids was the U.S. landing the first capsule on the moon, right? It was the first time we put a tin can with people, with a living organism and landed it somewhere else and got them back. That's incredible. But that took, if there's a pendulum of central versus decentral planning, I would say this is the central side and this is where getting that, little capsule on the moon was, right? It took enormous amounts of resources, engineering, et cetera, et cetera. Since that happened, in my opinion, the pendulum has started to shift. And this is mostly because of the transistor, right? Which led to the computer chip. And it's a long history. You could read Homo Deus and other books that really explain this. But now, for the last 50 years, the pendulum has been swinging towards decentralization. And I think that the reason that it's been swinging in parallel is for a few reasons, right? The Moore's Law, which is basically gave birth to Silicon Valley and modern technology, and the failing monetary system that I described before. So along comes Bitcoin, which is, by the way, was the result of a lot of things: encryption technology, BitTorrent, peer-to-peer distribution technology, all other types of math that were involved, and all basically culminating in this idea of a decentralized system. When I first read the paper, I said to myself, if I understand this person, whoever it is, correctly, they think they're going to use every computer in the world to avoid having a central database to process transactions. I said, that's insane. Why would anybody want to give up their computer to just, act as right? You're going to end up with, I thought you would end up with a centralized network replacing the database, so you would replace one problem with another problem. I revisited it a few months later and was talking to friends about it who had finally started reading it because there was nobody else to talk to at the time. And they said, this whole mining idea, which is the idea of using every computer to process transactions, it's really not as bad as you think, because, there'll probably be data centers and clusters of mines where it's efficient, and if it scales, and, probably go from PCs to GPUs to, clusters of PCs or whatever we would call it, which turns out what's happened. The point being that when you looked at it from that perspective, okay, you could actually make a case now where, all right, I get the math proves that it's out there. I get the scalability, because Satoshi said that over time you could actually put more data through the blockchain. And I get the decentralization of having clusters of miners and not having to use every computer in the world. And so when I brought it all together, I was like, this is exactly how money should work. It was incredible. Like, it was literally like an explosion in my head. Like, this is it, right? If the world can figure this out, that this is what this is really all about, it will change how banking works. And at the time, I was working in like hotspots all over the world, Haiti and Guatemala and rural Mexico, and dealing with payments and money transfer, and was banging my head against the wall, dealing with regulators trying to send $15, $20 around, which made no sense to me. I said, and at the same time, I'm reading this where I'm saying, well, this network belongs to the people.
Yeah.
Right? You can't shut it off. So that's the last piece of the puzzle, is if you have no off switch and it belongs to the people, right? You now have the answer to the hundreds-year-old problem, which is, how do you get rid of this fiat, this rule by decree monetary model that we've had for hundreds of years?
So when you say a shadow central bank, do you mean that on the sovereign level, or do you mean that on the individual level? Do you see?
It doesn't really matter, because at the end of the day, the dollar's not going anywhere, right? We've been slow boiling the frog for 50 years, and that could go on for another 25. When it fails, it will fail very quickly, like overnight. But I think in parallel, a lot of other individual sovereign currencies are going to fail, right?
Okay.
From second tier markets, not necessarily in the third world, but in the middle of the kind of global income pyramid, because they can't compete with the dollar. They don't have dollar hegemony, so printing more of their currency to get themselves out of their mess isn't going to work, because their interest rates will go through the roof. And if they don't, the reverse will happen to inflation, right? So they're in a horrible position. They're literally no win. Which is why I think those currencies, there'll be 50 to 75 of them that either fail or migrate to a dollar-backed standard, right? Which is like a Bermuda dollar, for example, which isn't really a dollar. It's not a foreign currency because it's just one-to-one backed in the dollar, right? Either way, they're gone. What are they going to do, right? So my prediction is that just like people are starting to hold Bitcoin, governments will hold Bitcoin. You'll have securitized versions of Bitcoin, which is what the ETF is. You'll have people who have it buried in their backyard. It doesn't matter is the point. It doesn't know, it doesn't care. It's just software. Use it or don't use it. The point is that enough people see the value in being able to store their energy and productivity in something that doesn't lose value mathematically. That's what's driving this. There's enough people that get that it's caused the speculators and everyone else to kind of swim in our ocean. And that's fine, because we need that to kind of build out, the infrastructure that it takes to store Bitcoin, move it around, borrow against it, all the things that we would want to do at scale, which is what's been happening for the last 7-8 years.
So does that mean that you see it then as a Bitcoin standard, right? Again, on a global level, do you see central banks pegging or backing their fiat currency with Bitcoin? How do you see that interplay?
I do, and the way it plays out is that I think the smaller countries, and El Salvador was unique in so that they already had a dollar standard, right? So they didn't have their own currency to give up when they adopted a partial Bitcoin standard.
Right.
I do think when other currencies start to fail, I wouldn't be surprised if they create a local one-to-one pegged dollar currency, as well as another currency, right, which is backed by Bitcoin, gold,
so
oil
individual
reserves.
Countries having a dollar-backed fiat as well as, or dollar-backed pegged fiat as well as another fiat. If it makes sense to do that. I think the BRICS countries, plus some of their kind of partner or friendlier, countries will form
an asset-backed currency. I don't see how that doesn't happen, right? They just, after we canceled Russia on, at the start of the Ukraine war, it was clear to every nation in the world was put on notice that the U.S. can basically police the world's, banking system, regardless of where the transactions happen. So, of course, it's like a cat being backed in a corner. Of course, it's going to fight back. And the way the BRICS are going to fight back is they're going to try to create a parallel system, right? And they're going to try to do what's right, like I said before, which everyone else does, and base it on commodities. And I believe that at some point, it may start with the smaller countries where their currencies have failed. They will start adding Bitcoin to those reserves. Whether BRICS does it out of the gate, probably not, but they'll get there eventually, because it'll prove at scale to be the most stable of all assets. When people talk about Bitcoin volatility, it's not Bitcoin that's volatile. It's the dollar that's volatile. Bitcoin's just being inflated at a predictable rate.
So the idea, again, of the dollar being weaponized excessively, with the sanctions against Russia being taken off the SWIFT system, one of the pivotal moments that, analysts on this show have said sort of triggered this big bifurcation of the global monetary system, although the trend has been underway, but certainly that was like a watershed moment over there. As well as some have said the debacle of the withdrawal from Afghanistan in terms of creating lack of faith in the U.S.'s foreign policy, but certainly the weaponization of the dollar with Russia's invasion of Ukraine. And we know the BRICS, as you've mentioned, have said that they want to encourage trade in their own currencies. They've actively doing that. And there is talk of a commodity-backed common BRICS currency. We have the trend of central banks around the world buying gold at record levels, China leading the way over there. Why would this currency not be backed by gold and by Bitcoin? Or do you envision a basket of commodities and Bitcoin?
I think a basket makes sense for a couple of reasons. One is Bitcoin's biggest weakness is its reliance on electricity to validate transactions, right? And publishing data over the internet. Those are the two weaknesses, meaning you, insofar that you have to have those things, otherwise it just doesn't work. Gold's weakness is that it's hard to transport, it's heavy, and you can go to war to steal it, you know where it is, and you can eventually dig it out of the ground. And so if you have a solution that deals with both weaknesses at the same time, that's great, right? That's what I would look to do. The other challenge with gold, though, is it's not one-to-one in terms of its hardness or soundness as money. Because unencumbered, we've been finding 2% of the supply of gold in the ground forever, right? And we don't know how much is out there floating around in our solar system, in our galaxy, or in the millions of galaxies that surround it. We don't know, right? And so if all of a sudden something happens where some asteroid collides with Earth and the gold supply is doubled, guess what's going to happen to the value of global currencies, right? Well, one of two things will happen. Those governments will go confiscate that gold to make sure no one else has it and hopefully lose it in their minds, right? Or the value of their currencies is going to plummet if they're free floating.
Well, it's a bit of a tail risk to have an asteroid crashing into Earth with tons of gold on it.
I agree.
To even have
it's the definition of a black swan event. But my point is that can't happen with Bitcoin. Right. There is no proverbial asteroid with more Bitcoin. We know how much there is. We know how much was created. A bunch of it was probably lost. Probably 20-25% was lost. Doesn't matter. The float is the float.
Okay, so take me though how we get to this situation. You said frog in boiling water, as we've been with the dollar, slowly then suddenly, right? What would happen to get the U.S. to come on board and realize that the dollar needs to be backed by commodities, by gold or Bitcoin or a basket?
Here's a scenario that's not far-fetched, okay? The central bank, the U.S. central bank, the Fed has to start buying our bonds because basically we need to issue debt because we're still, running large deficits and no one wants to buy the debt anymore. We used to sell most of it to China and Japan and et cetera, et cetera. Now we'll do deals, backroom deals where they'll buy it, but in much lower quantities. And that's offset by the fact that a lot of international holders are going to be selling.
Yeah.
So the net of that is that interest rates are going to have to be very, very high. The only organization in the United States that the U.S. has been able to force to buy this debt is U.S. banks, right? And the higher the interest rates go, the more money they're losing because the value of the debt keeps going down. But those are their clients' deposits. Those are liabilities on their balance sheet, meaning every deposit that goes into the bank is a dollar-based liability whose value does not decrease. It actually increases with the amount of interest I'm paying, right? But yet the value of the debt that I've used, right, to turn it into an asset is going down.
Yeah.
Right? That's what happened last year when Silicon Valley Bank failed, because banks have historically been allowed to value the bonds in their portfolio at maturity, which could be in 30 years.
Right. So
I mean,
price to market value.
yeah, I mean, companies would kill for that, right? But they can't do that. Okay, so now if that becomes systemic, because interest rates are going up, because no one wants to buy our debt, and international governments are selling the existing debt, you can see a cascade of these bank failures, which will start to erode confidence, because the FDIC can cover 1% of deposits without printing more money in a massive bailout, right? But you're basically then saying who wins, because if this becomes a systemic issue, interest rates will go up, inflation will go up, right? Banks will start to fail. The government will start to basically print massive amounts of money. It will make TARP look like a cakewalk, and all of a sudden, right? Back to your question, the inflation rate is skyrocketing. People are dumping dollars for the first time, and people are saying, where do I go? Maybe they'll look at gold stablecoins. Maybe they'll look at Bitcoin. But, right now, people will use a dollar stablecoin if they live in Nigeria because the alternative is a joke, right? But if the dollar becomes the joke, then what's the alternative? So you see, you can see a path where...
So you see it on the individual level first?
I think it happens everywhere all at once. I mean, if banks start to systemically fail at a rate that basically says, all right, interest rates are going up at the same time because no one's buying the debt. China is selling the debt. Banks are failing. All of a sudden, the dollar is not the safe haven that it was for anyone. Never mind international transactions, individuals like you were alluding to, U.S. companies looking at their balance sheet going, what am I going to do with my treasury? Right? It's in treasuries. Well, okay, those are losing 1% a day in value, right? So maybe I should actually think about something that's not losing value, hard assets. Well, do I really want to start buying real estate given the state of affairs, right? Do I want to put my treasury in, other company stock, right, given the state of affairs? Or what if I have a way to store productivity and the value on my balance sheet as a digital asset that retains its value over time, that is provably hardened. And so that's the path. It really hasn't changed for me since I gave the TED Talk, 13 years ago, whenever it was. It's just the path is a little bit clearer, and we're much further along on the timeline now.
Well, back in 2011, you could argue that there wasn't this much lack of faith in the US dollar. The systemic issues were there in terms of debasement and debt, but there wasn't this shift in the global narrative about the lack of faith in the dollar. So pretty,
So look at the difference to me is, the difference in what you're saying is the frogs that are in the boiling water that just got put in, right? The water's not boiling yet. They got put in the water, they've turned up the heat, but there's two frogs sitting out here looking down. And they're looking down and going, oh my God, this frog's getting boiled and it doesn't know it, right? If you've studied Austrian economics, if you've looked at how monetary systems have failed and how fiat currencies have failed over time, you're like the frogs that are looking down because you can actually see what's going on.
A very perceptive frog you were back in 2011. But let's talk about the timeline, because what do you think is the timeline for this to happen?
It depends on a few things. If the worst case scenario becomes that international governments holding large amounts of US debt are incentivized to take their lumps and just sell the debt and migrate to the BRICS standard or some new commodity standard, interest rates will skyrocket in the United States. That could happen in a matter of weeks and single-digit months, whenever it happens, right? So the U.S. has, like I said before, today has a big problem because they desperately need interest rates to be lower to service the debt. And they just don't know how to do it because they're lying about what inflation really is because they don't know what else to do. I hosted spaces on this and we went through the numbers and it's a huge disconnect. Anyway, so I don't know if it's this cycle, the next cycle, the cycle after that, but I think that the current path is unsustainable. And I don't see that Goldilocks, negative Goldilocks scenario not happening in like the next 30 to 40 years. Now, I think it's more likely going to happen in the next 20 years, which is really not that long. But what really happens when that happens? Okay, so, we will definitely be in somewhere in between the 2007 recession and the 1920s depression, for sure. Like, it'll be worse than 2007. Will it be as bad as 1927? Probably not, because we do have medical infrastructure, we do have charity organizations. The dollar isn't worthless, right? I don't think it becomes like literally worthless on Tuesday and not worthless when it was not worthless on Monday. But people are going to basically get really scared, really, really scared. And again, what is my alternative? Does the world shut down? I don't think so. I think basically what the world looks to alternatives and said, look, money is just a way to store productivity at the end of the day. That's all it is, right? It just basically replaces in real-time barter with storing the productivity and then bartering later. So that's all it is. We can do it with anything of value, right? It's just easier when we're all doing it with the same thing. That's all. The world will continue to spin on its axis like it has every other time that this has happened. Dalio's
But arguably the quality of life for Americans who have gotten used to having the US dollar as a reserve currency,
that's not what it is. It's worse than that. We've gotten basically fat and happy at the expense of future generations by printing money that we don't have, not backed on assets that we also don't have. And so that has basically led to a debt jubilee that has lasted for 25 years that has created the income disparity that we know in the US today, right? There's two income disparities. There's the few billionaire, 100 million plus, which, they're in their own parallel universe. And then there's the disparity between the middle and everyone else, where it seems like the middle class is moving into the lower class, and it's happening because of this debt. Right, it is an invisible tax on the middle class. That's exactly what it is, and it's been happening for 25 years, more, but really acute the last 25 to 30 years.
So let's talk about the other frogs, watching the frogs in the pot boil that are seeing the writing on the wall. And you've mentioned that we're seeing an increasing number of public companies start to put their assets in Bitcoin. A trend arguably led by Michael Saylor of MicroStrategy, which I believe, according to the latest count, has over 214,000 Bitcoin, sort of pioneered that trend. How prevalent is this? How many public companies are following suit?
We've been holding Bitcoin on our balance sheets, I think, since the beginning of Abra. But look, it's very simple. I've seen a few of these announcements the last couple of weeks of mid-sized companies that are putting Bitcoin on their balance sheet. What happens to these companies now when they do that? Their stock price jumps immediately. I think the last one I saw, they jumped over 30%. I don't remember the name of the company. It was the last one a couple of weeks ago. And I never even heard of the company. But all of a sudden, their stock price jumped 30%. Why? Was their cash flow going to go up significantly? Or was the public discounting the value of the cash in the treasury they were generating? I think it's the latter, right? And so if you're a mid-sized public company that has a good cash flow business and you're looking at this announcement, what are you going to do? You're going to start digging in and going, what does this person know that I don't know? Because their stock just went up 30% and their sales didn't go up. Well, they're not eroding the value of their treasury anymore because they figured out that Saylor was right all along, right? Bitcoin is not perfect money yet. It's going up in value because it's the promise of perfect money once everybody has access, because not everybody has access today, combined with government policy, right, which deflates the value of the currency. So companies are going to realize that they have no choice.
And then game theory kicks in.
100%.
FOMO kicks in. I mean, according to our data here, there is about 303,884 Bitcoin holdings by public companies in the U.S., worth over $14.3 billion at the current rate. Do you foresee a scenario where every public company starts to have some diversification with Bitcoin as an
again,
asset?
I come back to the same point. If the value of your treasury is being eroded and you're like the Fred Flintstone spinning his wheels, not getting anywhere because inflation is eating away at the returns on your treasury, what are you working for? You're working to basically add a depreciating asset to the balance sheet of the entity that I have invested in as a stockholder.
Right.
Okay, can somebody explain the logic of that to me? That's what's happening today. I'm not predicting that's what's going to happen in the future. It's happening now. No one questions it because nobody perceives an alternative. It's simply always been that way, or at least since 1950, it's been that way. Except in 1971, with the way the debt model works, we became a leveraged society in order to make up for that, right? Everybody has so much debt on their balance sheet. The point being that they're looking at this going, if there is an alternative and their stock price is reaping the benefit of that alternative, we have to do the same.
Right.
That's common sense. And I think that you're just basically seeing barely scraping, we're not even at the start line of that process yet.
Let's talk about sovereign nations, though. We know that the U.S. is the largest cryptocurrency holder in the world, but mostly because it's confiscated it from criminal endeavors. We have some predictions from the likes of Edward Snowden that this year we're going to see a big sovereign disclose that they're buying Bitcoin as an asset. We had Gary Cardone on the show a few months ago. He seconded that prediction, saying he thinks this year we will have a big announcement of a major economy adding Bitcoin to their reserves. What are you thinking in terms of countries following suit, seeing what the public companies are doing?
Sure. I think it's a tale of two cities, kind of a third city with the consumer, which we'll come back to. But on the government front, it's very similar, right? So you're going to have mid-sized currencies start to fail, meaning mid-sized countries' currencies start to fail because they can't do what the U.S. is doing.
Is that like an Argentina? What do we call it?
Argentina actually has a good shot of succeeding now with the new policies, right? Because basically they're doing what I said everybody else needs to do but won't have the political will to do, which is absorb the pain. And so you can already see, I have friends making trips to Argentina now to talk about local investing within months of him changing the policy. So I'm bullish on what they're doing right now. But if you look at just pick the 25 countries it's surrounded by, and the next 25 closest. And most likely, right, they're having the same structural issues that we are, maybe a little bit less because they don't have our military expenses, but also don't have our resources, right? So the two kind of offset each other. And they are not going to be able to print money to pay off the interest, and yet no one wants to buy any more debt from them because they have no military, they have no power. Right, so structurally, you're going to see big inflation in a lot of these markets if they can't move fast enough to a dollar-based system, or the currencies will simply fail. Right, and I predict that you're going to see 50 to 75 non-U.S. dollar-backed or non-euro-backed currencies fail in the next 25 years.
All right, 25 years.
I'm more confident about that even than I am about what would happen to the dollar in the 20 to 25 year time frame, because we can drag it out a little bit, but the scenario I described earlier is going to happen. With international currencies basically backed in nothing, it's a ticking time bomb.
So once those currencies fail, do they go dollar or do they go straight to this commodity, to Bitcoin or this commodity?
Right, you have to look at each country, right? If you're a country with no resources, you have a big problem. Because right now, what is the commodity basket that you're going to use to create a new currency? The reserves have to exist in the physical world. Even Bitcoin, you could posit it's like it is a real world asset now, even though it's digital. So what are the real world assets, Bitcoin, oil, gold, whatever, that you're going to use? Right? Or you're basically building a tax base, based upon some other basket of currencies, and so the migration to a new currency is really ugly.
Yeah.
It's really ugly. Austerity's better, but either way, you get there, because what we're doing now is unsustainable. Like I said, I think the U.S., China, Europe, we can drag it out a little bit further because of our global status and the fact that the people will need our currencies to trade and do cross-border trade and commerce, but that's only going to get you so far.
Which country do you think is most likely to be the first to, other than El Salvador, and we mentioned Argentina, to really come out and say, we're going the Bitcoin route?
I wouldn't be surprised if Argentina announces that they're going to include Bitcoin in the basket of commodities they support in the next year. I wouldn't be surprised at all.
Because Javier Milei has been he's been aggressively pro-Bitcoin and very revolutionary.
He's playing the Hayek von Mises playbook so far to the letter, and he obviously gets it better than I do. He's a tried and true Austrian economist, so if anyone's going to do that in the short term, it's him. The political pressure on him not to do that would probably be significant, but that will erode as well over time.
So you see Argentina, and then does that trigger other countries in the region?
Oh, I think throughout the world, not just the region. I think the biggest challenge will be China's partners and China's influence to convince them not to do that and adopt the digital yuan. And we should be very concerned about that. That's probably the most troubling of all the alternatives that I can see, because people complain about having a nanny state under a central bank digital currency. China already has it.
Yeah.
Right? And so why in God's name would you be willing to do commerce under those circumstances? But they can bring a significant influence to bear on the countries that they're close and are dependent upon them.
Well, because there's this, shall we say, lack of trust with the yuan. We've seen oil transactions backed by gold. When we're seeing the petrodollar status diminish slightly, countries selling oil to China, receiving yuan, but with a gold backing, right? So this BRICS common currency, maybe the pressure doesn't come from the yuan, but from this, BRICS common currency with China.
Sure, it's not just about the underlying asset. It's also about the technology being used, right? So you can posit that any central bank digital currency is most likely going to be a surveillance tool by someone.
Yes.
Whether it's backed in gold, whether it's fiat version of the yuan, it doesn't matter, in my opinion.
Right, and as CBDC has been a big focus at this particular conference, we had Congressman Emmer, who passed the CBDC Anti-Surveillance Act in the House here, discussing the dangers of the surveillance, the programmability of a central bank digital currency. So beyond China exerting some kind of pressure there, you see the default, Argentina potentially first, and then other countries start to slowly add.
Right. I don't think Argentina needs to wait for some global event. I think they get it now. Just
it's just a tough political move.
Consumer like an Argentinian who understands better what failed monetary policies do to your society. No one. I mean, it's like their matrix is on fast forward. Because it just keeps happening over and over again.
And the individual rate of adoption of Bitcoin in Argentina by individuals is extremely high because of the devaluing and debasement of the peso.
Stablecoins have also become popular, like they have in Nigeria and places where it's hard to get a dollar bank account. Yeah.
So that brings up an interesting point. Does the U.S. stablecoin perhaps preserve the U.S. global reserve currency status?
It helps because what happens is that the more people who are putting money into stablecoins, right, the more cash is basically being hoarded by the issuers of the stablecoins, and they're buying treasuries. Right. So that actually can help stabilize the interest rates at scale.
Yeah.
But they can only go so far.
So that extends the lifespan of the dollar, but
a little bit. But because you got to remember, you're talking about Nigeria. I'm not talking about Europeans adopting the dollar. I'm talking about the failing, middle of the pyramid income countries adopting the dollar, some via stablecoins. Their GDPs are very low.
Right.
So you're not moving, huge swaths of the global GDP into stables. But it's enough where it will matter, for sure. I mean, I think stablecoins represent almost 15% of treasury buys. I don't know if I got that number exactly right, but I'm pretty sure it's between 15 and 20%. From zero 5 years ago. That is insane.
And one would think that the U.S. should then welcome this, right?
They're figuring it out.
That is the buzz at this conference.
They are figuring that out.
Some kind of legislation too.
It's kind of like lots of different clouds of figuring it out at the same time. What is the value to the government of having lots of U.S. dollar denominated stablecoins versus something else? Well, it could actually at massive scale stabilize interest rates. Does that mean that the current regime has kind of waffled on its anti-crypto stance as it relates to everything else? I don't think so. But it's definitely a moving target. There's a million conversations happening at once. I was in DC for the big blockchain summit there 2 weeks ago, and the number of senators and Congress people and regulators that were engaged was encouraging. But the problem is we still don't have the do no harm mentality. Right? If you start from do no harm, sometimes actually not having a law is okay. Right? We don't. There's got to be a law. There's got to be rules. What's the rule book? No, that's not the society we founded. Right?
Yeah.
It's Constitution's meant to be a document of exceptions. You have unlimited power except for what's here. Right? So we don't have to always assume that there needs to be a law. Do no harm in medical practice is a very reasonable starting point for first principles.
Yeah.
We could use that in a little bit of our financial and monetary thinking as well.
First, do no harm. So stablecoins, USDC, US stablecoins, US dollar-backed stablecoins could potentially extend the lifeline, but doesn't really save the problem. So let's go back to the overall picture here. So we've got Bitcoin as the shadow central bank, or the central bank asset.
Yeah.
The next forecast is that you have Ethereum as the primary blockchain for institutions, and that we're going to see the traditional financial system move on chain through this process of tokenization. Break that down.
Sure. So the beauty of digital currencies is that once you're operating outside of a traditional database and using like a token that you can move around just peer-to-peer, it doesn't have to reside in your computer anymore, the transaction. It can be everywhere. But that almost necessitates a new banking system that's not based upon the mainframes that we still use to process ATM withdrawals, right? Those were built in the 1970s before the internet existed. We need a banking system and a financial system that works at internet scale. So derivative transactions, institutional lending, how are we going to do that using tokenized stocks or Bitcoin as collateral for a loan? Well, DeFi and all of the different kind of decentralized applications that have been built on this new kind of crypto smart contract stack take advantage of all of this. Always on, meaning 24/7, 365, always on, right? No borders. Sometimes we artificially put borders into these systems because we're afraid of being sued, right? Even if we think we're right. So we'll put IP checks for country checks or whatever to block the US usually, right? But basically it's borderless, always on, operates 24/7, and is infinitely, more scalable than monolithic systems that each investment bank has had to build on their own over the years. And so Ethereum has proven to be so far the most scalable, ideal, hardened, global decentralized network for running these they're really called smart contract-based applications, and DeFi being, or decentralized finance being the culmination of that to date, which is kind of the wholesale rebuilding of the investment banking stack and the trading stack using these smart contracts. And right now, Ethereum is clearly the winner in that game.
You say right now, but do you anticipate another blockchain?
I don't. I think Ethereum will improve over time as it relates to this type of transaction, but it's not going to scale to consumer numbers, right? If you look at contributions to GDP of investment banking versus the consumer wins by a couple of orders of magnitude, I think. And this is no different, right? So the scalability requirements to run institutional investing are nowhere near the requirements to run a consumer business, like Visa, for example, right? Visa can scale on Ethereum.
Which is how we get to Solana on the retail side. But before we get to that forecast, expand a little bit more on the timeline that you see this tokenization of traditional finance on the blockchain.
Sure.
I mean, we know Larry Fink, CEO of BlackRock, has been an advocate for this, saying that it's going to happen, that every single financial transaction is going to be on the blockchain. Give us a sense of what that looks like and the timeline there.
Sure. There's a lot of moving parts here, but stablecoins not only solved a big problem in the early days of crypto because exchanges couldn't open bank accounts, so they had no other way to get dollars in the system. It also basically showed us that we could have real world assets represented as tokens, right, on smart contract systems like Ethereum, right? So effectively what we're saying is there's no difference between tokenizing gold, the dollar, the euro, stocks, bonds, your home, commercial real estate, et cetera, right? The difference is that now, because you're dealing with the physical world, whereas with Bitcoin, you're not dealing with the physical world, right. Governments now have rules. And the problem is those rules generally have borders that they are confined to, whereas DeFi and these smart contracts are borderless, always on, right? And have no off switch. So we'll figure that out. I think most securities laws will either disappear or be rewritten within 30 years, probably much sooner. But the tokenization has started. Other countries that don't have our draconian complex commodities and securities trading laws will probably go faster, which is fine. I think this is a huge chance for the likes of Dubai and Singapore because they're going to vie to become the global financial hubs of the future and say, you know what, you want to tokenize anything? This is the place to do it, right? We'll give you a very simple framework. And any regulations that we create will be from this do no harm perspective because that's how we're going to win your business. Right. We don't think that way from a regulatory perspective in the U.S. Everybody has to be protected somehow, right? So that's the opportunity, and so I see more and more of these applications coming. My prediction is you'll get to $1 trillion of institutional assets in the next 5 years in DeFi, which isn't a huge lift, but it's a non-trivial number, right? And it's just going to go from there. It's just going to go from there. And you'll see new types of stock exchanges that work just like a crypto exchange. You don't talk about T+1 settlement. It's just settled, right? And you can retain title to your asset by putting it on a thumb drive, which is pretty cool.
Can be cool until you lose that thumb drive, but
Free backups.
So let's go onto the retail side because, as you said, the efficiency, the speed of some of the other blockchains has not been on a Visa-like level, has not been conducive to retail transactions, and that's where Solana comes in.
Yeah. So the history of this is that Bitcoin was built to solve what I call the decentralization problem, meaning can we have money with no central trusted third party in the middle, no central bank, no individual banks required at all, right? The cost of that decentralization was massive inefficiency. Take your favorite database, make a gazillion copies, each one of those becomes a miner, and you're basically replicating that transaction, and then the future transactions are linked, and then you have a blockchain, chain of blocks, right? Very inefficient, right? Which is why, the price of Bitcoin transaction goes up over time because more and more people are competing to get their transaction processed because it has a fixed amount of processing power. Ethereum represents significant improvements on that, but Solana has basically gone to another level in terms of being able to build high performance, scalable, high throughput, but decentralized transaction processing systems, like to the likes we've never seen, at least at this scale so far. And the promise is there that you could build Visa-like scalable systems on top of Solana, right? So then Bitcoin becomes the monetary network, Ethereum becomes the kind of investment banking institutional network, and Solana really lends itself to that low-cost, high-throughput transaction. And that's manifested itself in the short term by everyone creating their own token, which we're calling meme coins,
Right. We were chatting about this yesterday, how every celebrity now, well, not every, but we've got an influx of celebrities from Caitlyn Jenner to Iggy Azalea. All of a sudden having these celebrity meme coins on Solana.
Why didn't that happen on Ethereum? Well, it made no sense because I'm not going to create a token, distribute it, and everybody has to spend $50 to move the token around. Right? And you wouldn't do it. But now, because it costs a fraction of a penny to move a Solana-based token around, nobody cares, right? And so, but I don't really care about, how many meme coins there are, or if any of them goes to the moon in terms of price. I don't really care. But I do care that it's proving that we can build a Visa, MasterCard, Amex scalable-like network on a layer 1 blockchain with crypto rails. That's huge. Because now, think about the neobanks that we had in retail all over the world the last 15 years. If I was launching a neobank today, I'd be building it on Solana because I don't have to basically build a bank-based treasury anymore. I can issue stable coins. I can pay yield on those stable coins. I can enable crypto trading. I can give you a Visa card, right, that will actually convert the stable coins to be used for payment at the point of sale. I can use bank hooks from a partner bank to get your salary converted to stable coins. And it works everywhere in the world.
And obviously, interesting to point out that PayPal has now launched its PayUSD stablecoin on Solana, which just makes that point. So, Bill, how do you wrap all three together then? How does Solana work with Bitcoin as the central bank asset with Ethereum and the institution? How do all three interoperability work together?
It's a great question. The interoperability comes from kind of like cross-chain transaction processing, which is a kind of a complex, esoteric piece of the crypto developer ecosystem. There are some companies that are doing phenomenal work in developing kind of cross-chain transaction processing. DeFi transactions can actually use Bitcoin as collateral. So in English, you can actually borrow dollars against Bitcoin that you own. And there's a process for doing that because Ethereum doesn't know of Bitcoin and Bitcoin doesn't know of Ethereum. Well, we've created a stablecoin based on Bitcoin. And that's called wrapped Bitcoin. And then you can use that wrapped Bitcoin. It's the largest component of many DeFi smart contracts now. It's a combination of depositing Bitcoin, borrowing stablecoins.
And you would see that happen on the retail level how as well?
Okay, so what I'm describing now is much more of an institutional transaction. And we're doing lots of that at Abra today. We've been doing DeFi transactions, using Bitcoin as collateral and other cryptocurrencies collateral for years already. On the consumer side, if you're holding, let's say you're in the Philippines, there's no credit infrastructure, right? But you want to buy at the point of sale and you want to have the same protections that we get when we use a credit card in the US. Well, let's say you're holding $1,000 worth of Bitcoin in your wallet. And it's not as volatile as today, but it still might be might fluctuate 15, 20% a year. I'll let you spend at the point of sale up to $500 worth of that Bitcoin using something like a Visa credit card, right? But you've never had a credit score in your life. You're just borrowing against your savings, which is in Bitcoin, right? And if the price of Bitcoin goes up, we'll let you borrow more. Or you can pay it back, whatever you want. And so now the consumer has pristine collateral that they can use to build a credit network globally. You have other tokenized assets you'll be able to hold and probably borrow against. I think that's the most interesting aspect of having real world assets on a blockchain that you were alluding to, that BlackRock and others have spoken about. It's lending markets. Because now you have a normalized way to access DeFi for collateral, right? Institutions know what DeFi is. From the consumer's perspective, they won't understand what I just said. They're going to be borrowing against the value of their house, the value of their stocks, the value of their gold, and the whole network will just work. And if you don't pay back the loan, there's no sophisticated shenanigans with rehypothecation. We're just liquidating your assets. Which is what should happen.
Right, I guess that is what should happen, right? You just take your tokenized house deed and you don't pay back your loan. I mean, hopefully there'll be some protections there, and it wouldn't. But that would make for a safer financial system and bring back responsible consumer behavior.
Outside of government printing money and debt, that we take on, it's over leverage in the banking system that has traditionally been the beginning of a bank failure.
And we saw that in 2008, people living beyond their means.
Not only people, but banks living beyond.
Right. But it also started with individuals who, were taking out credit and taking out home loans that were beyond their means. So it sounds like it's a negative, but in a way it's a positive to force people to behave more financially, in a more responsible financial manner, I suppose.
100%.
So that's the vision. So, Bill, if you were betting on the token to have the most upside right now, is it Bitcoin, is it ETH, or is it Solana?
So I think of Bitcoin as kind of my treasury asset. Like, I don't think in dollar terms, I think in Bitcoin terms. And when I can. I mean, if I have to buy a house or something, obviously I think in dollar terms. But I think that in the short term, from a purely investment perspective, the price of Bitcoin, Ethereum, and Solana have been purely driven by network effects. And Bitcoin is winning the network effects game as it comes to sound money. Ethereum is winning the network effects game with institutions and DeFi users. And there are a lot of individual traders doing that DeFi, but it's people who know trading. And Solana is starting to win the network effects as it relates to retail. We saw it first with the meme coins, and I think you're going to see it with neobanking and other lending applications and credit yield, whatever. And so as a result, I'm most bullish in the very short term on the price appreciation in Solana, even though it's run up a lot, just because it's winning those network effects at faster rates than the Bitcoin and Ethereum. That will stop at some point, and I would be holding more in Bitcoin at that point, because like I said, that's kind of my personal beta, like how I think about my own asset protection and net worth. And there'll come a point at which the risk reward of holding the skyrocketing in usage Solana may not make as much sense anymore because everybody's using it.
Got it. So near-term appreciation, Solana, but ultimately Bitcoin.
Bitcoin is my personal reserve asset, and I would strongly encourage most people with more than a 2-year time horizon to consider that perspective for themselves.
All right. As we wrap up here, Bill, it's been fascinating to talk to you. Give us a quick insight into what Abra is up to.
Sure. So Abra is a prime broker and wealth manager in the crypto space. Our prime brokerage works with institutions, hedge funds, VCs, family offices, basically for everything from spot trading, derivatives, options, so covered calls. We work for miners, help them with their liquidations of their Bitcoin, which is its own kind of unique trading process. We have a wealth management business that serves high net worth clients, family offices. That's a registered investment advisor. It offers yield services, lending. You can borrow against Bitcoin using a separately managed account model similar to the equities world, so it's very safe. And yeah, that serves hundreds of millions of dollars so far. It's recently launched, so we're very happy with the response there so far.
And you, of course, because of this, really have your finger on the pulse of the crypto market.
It's hard. A lot going on at once. Yeah.
Being able to see the trends, and hence you have such clarity in this vision of Bitcoin as the shadow central bank, ETH as the institutional blockchain, and Solana as the retail blockchain. Bill, it's been great chatting with you. Thank you so much. We look forward to having you back on.
Look forward to it. Thanks for having me.
Okay.
Kitco News special coverage of Consensus 2024 is brought to you by Diamond Standard.